Okay, good morning, everyone, and welcome to this morning's edition of the Coffee Microcaps Morning Meeting. My name is Mark Tobin. For anybody who's joining us for the first time this morning, I'm the founder of Coffee Microcaps, and this is the 65th edition of the morning meeting. I'd like to give a quick shout out to our sponsors, DMX Asset Management. If anybody is interested in looking at a small and microcap fund manager, please be sure to check out their website and the relevant PDS on there. A quick compliance and disclaimer slide. If you are joining us for the first time, the companies we normally have presenting on here generally on a weekly basis are capped under 300 million in revenue and approaching cash flow break even, or indeed already profitable. We generally don't have companies from the resources or biotech sector, so what I like to call industrial microcaps, which can encompass basically all of the other sectors you would find on the ASX. Structured this morning's webinar, we've got two presenters. Each are going to get roughly a 30-minute slot, which we break into a 20-minute prezzo and then 10 minutes of Q&A. If you do have any questions for our presenters, please type them in the Q&A box rather than the chat function. It just makes it easier for me to moderate the questions. And please note the webinar is being recorded and will be posted on the Coffee Microcaps YouTube channel tomorrow morning. You can follow us on Twitter, YouTube, LinkedIn. We're on all the social channels. Presenting this morning, we've got, coming back actually for the third time, Elias Hazouri, CEO and Chief Executive Officer of HiTech Group Australia. And we also have joining us this morning for the first time, Crispe from RAS Technology Holdings. And without further ado, a slight change to the advertised lineup. We're going to have Stephen first, and Elias is going to be joining us for the second session. So I am going to stop sharing my screen now. And Stephen, if you want to start sharing yours, I'll let you know when I can see the cover slide coming up. It's coming through now. Yeah, I can see the cover slide of your presentation now, Stephen.
Wonderful. That's great. Thanks very much, Mark.
Okay, perfect.
So let's jump straight into it, shall we? So racing in sports is new to the listed environment, having listed successfully in November of 2021 last year. So it's only been a short amount of time, but racing in sports has a very long history, though. Been in the industry for over 20 years. Originally started in the digital media space with the racingsports.eu website, which was actually very early on in the era of websites. And the two founders of the business, Gary Crispe and Robert Lapidus, identified an opportunity to provide high quality information that had been not been seen by anyone in the racing and wagering community before. And that really took them down a route of developing a core database, producing analytical-based reports, statistics, as well as editorial content for consumers. And this was all essentially given away on the website for free. And then advertising was the initial brand of revenue that was generated. Now that very quickly turned into the Paragon realizing that they had a product that they could commercialize and sell as a B2B product to wagering operators. So that, of course, started very early on after the launch of the business in 2000s and continued quite well with the gents innovating, building their technical capabilities, which I actually worked for the business in the very early days as a developer and coding, and getting involved in those early days of internet and delivery of content capability. The business in probably the early 2015 started to really ride the wave of wagering operators looking for advantage online. As they were looking to online betting, fixed odds, innovation, right over customers. So having the digital assets as well as the content really was a strong suit for racing and sports. And the business sort of took off at that point, acquiring customers not just in Australia, but also around the world for that supply, creation, curation, high quality information for their wagering customers to consume and punt. So for example, in terms of the ecosystem, racing and sports really is a middleware provider. It's a B2B business predominantly from a revenue perspective, where we acquire raw data, we enhance that raw data, we produce high quality athlete-based products, and we sell those products in different formats and forms to all the different operators, whether they be in Australia, in the UK, in the US, or elsewhere in the world where they need that high quality information to provide to their customers. So again, a really strong part of the racing and sports business. It's been the core of the business, the core DNA, data, analytics, content, and we consume a high degree of information now on a daily basis from all around the world. We process that information and produce that enhanced content. So it really is a well-oiled machine. Use machine learning, AI techniques to actually bring the information, clean it up, and deduplicate it, analyze it, etc., to ensure that the product we're pushing is of the highest quality. We also have included a lot of our own IP into creating those products, I think performance ratings, performance models, and predictive algorithms essentially run over the content as well. So that's been a really strong part of the racing and sports brand business for the last 20 years, and we're very well known on a global scale and global basis now for that. And the ability to innovate new products and services is now coming really relevant, particularly with racing, trying to attract a demographic of customer. And we're certainly leading into sports with the same ambition and the same strategy with that we've applied to racing. Wagering technology and services has been the part of the racing and sports business. We've been doing this for a little over 2 years now in a commercial sense, but the business has actually been working on and developing wagering technology for well over 10 years. It's really now the market for the commercialisation of some of the technologies and pushing those into mainstream operators, of which we've had very good success here in Australia as well as internationally with wagering technology and services. And as you'll see later in the slide deck, this is really accounting for a lot of our growth in revenue as well. Past 12 to 18 months, these commercialise, the market knows about us, what we produce, why our product is superior, and we're having a strong pipeline of activity on the back of that wagering technology and services part of the business. Specialist data services really goes to speak to our high quality data products for private customers, private groups, and digital and media. We've already spoken about the racingsports.com.au website. That's actually now a really core focus of the business with over 2.5 million unique viewers every year, and these are highly distilled viewers looking for wagering, racing, and sporting content. So really important part of the business to have our own digital media mouthpiece that we can use for the industry, for our partners, for our clients, and rights wherever they be around the world. We are heavily leaning into the app development space of several apps in the pipeline as part of our digital media space too. So I think watch that space because it's going to be very exciting, and it really is the pointy end of the racing and sports business, dealing with customers directly, but also the tools for revenue prospecting of our customers. We're headquartered in Canberra. I have been since 1999, although we have opened an office in the UK where we now have 3 people working there. And that team is set to grow a little bit further over the next 6 to 12 months as well, just with demand of pipeline across the UK and European region. We hold a lot of our support operations out of Colombo, and IT development function is also there, as well as here in Canberra. And that has been in operation since 2016. There's very low attrition office, high degree of loyalty, education of wagering, racing, and sport industries for all that team. So it has been a really good move for racing sports to keep costs down, but also have the agility to operate in a proper 24/7 fashion, which is important now in the global landscape of wagering, racing, and sporting. And the US presence scheduled for 2022, and we've got an office now which we're setting up in Las Vegas by our partner, Sky Racing. So again, a really important part of racing sports is growth is into the US market, and we'll talk about that. And you can see some of our key customers in the top right. A lot of those are household names. A lot of these customers have been with us for well over a decade. So it really talks to the stickiness of those customers and the racing sports product. The global wagering industry is massive. As you can see, there's some of the statistics. But looking at the US market is well and truly underrepresented. Revenue based on the population in the US. So there is absolutely a large market to penetrate over there, but I think that'll be a slow process as the US legalizes fixed odds betting across state to state, which will take some time. However, pari-mutuel is strong in the US, certainly playing a part in the provision of content and data to those operators where we've had some good success to start some services over there. So I think watch that space very closely for racing and sports. We're not intending to burn a lot of cash over that market as we're not a wagering operator as such. We're not trying to acquire customers. We're trying to support those operators in their acquisition of customers, their differentiation points, providing them the services to promote racing and in the future sports products for their customers to consume and use to make educated decisions. So that's really what drives wagering revenue turnover is having the right information. Armed with that information, then they feel confident to participate in the wagering aspect. So that's certainly what we've done here in Australia, the UK, Europe. Certainly a very big part of the racing sports business. So let's have a look at the second half of the year compared to the first half. So you can see revenue has grown 90% since year on year. Underlying EBITDA is down, but that represents the cost. We're still very profitable, but the change from 1.4 to 1.1 really represents cost in upscaling the business. So we've actually started to invest well ahead of the curve in parallel for when we're actually IPOing the business to support growth. That's new headcount, increased technology infrastructure.
Sorry if I could interrupt quickly. Your audio is just fading in and out a bit. I don't know if you're a bit too far away from your microphone, but maybe if you could move a slight bit closer just to see if that improves the audio.
Yeah, of course. Is this better?
Yeah, that's better. Thank you.
Okay, excellent. So, and the real leading indicator for the business performance is the AMR, which you can see is up 89% 20 to 21. So again, a really strong indication of the growth of the performance. We've increased our number of enterprise customers up from 14 to 19, so an increase of 8%. And we've also increased our total number of customers up 52%. So you can see really strong growth from 20 to 21. And this is a trend that we're seeing continue as we work hard on growing and scaling the business. This slide's a really good one to see across the different business lines in the racing sports business where the revenue comes from. And you can see wholesale data content is the biggest revenue generator. However, you can see the growth from 3.5 to 5.1 across 20 to 21. Wagering technology services, though, as I said, up from 0.2 to 2.1. So, a really great result there for us as we can invest heavily and grow that part of the business. Specialist data services has doubled as well, which is very pleasing for us. And we're seeing an increase in digital media as well. So, growth across the board in all parts of the business, which is really, really pleasing. And then you can also see our jurisdictional breakdown of revenues. And in 20, where we had 69% of our revenue coming from Australia, which is now down to 49%, showing a real growth in our international revenue, which is exactly where we want to be in terms of growing the business, growing the revenue across all those different jurisdictions. Pleasingly, US has gone from 2% to 13%, continues to grow with our relationships and products over there, as well as the UK. So very, very pleasing. We've already spoken about completing the IPO. We've expanded the board and executive team, brought on some really good people into the business who have great networks, great experience in terms of execution, in terms of gaining access to the right people, not only here in Australia, but also across Asia, South America, Europe and the UK, and importantly, the US. We've grown the underlying business. We've seen the 89% AMR growth as of 31 December 2021. And we've also expanded the international reach of the business through partnerships. We're working closely with XBNet for the distribution of US racing into Australia and New Zealand, where we're exclusive. We have the exclusive rights to promote, distribute, enhance fixed odds and enhanced content for XBNet, and they represent over 70% of racetracks in the US. So they represent a massive amount of the US wagering and racing market for that. And we're working very closely with them, as well as into the UK and Europe. We're working with a partner press association for the distribution of that US product into the US market, into the UK European market as well. So very exciting for racing and sports. And the key partnerships that we're working on. So obviously Entain as a large shareholder in the racing and sports business. Very pleasing to have that trust from such a great cornerstone of the global wagering industry invest into the racing sports business, and they really see the opportunities for us to work with them on a commercial basis to assist them with their growth story, particularly internationally, where they're looking to innovate and execute. Racing and sports is a technology, a data, digital and media partner for them, as well as several other clients. And the growth strategies. So we'll jump across and look at those for the next half plans. The US strategy is core to what we're doing. It's really important that we execute sensibly in that market. A lot of companies are over there using and burning a lot of cash. We're not planning on doing that. We're planning on being quite surgical in our penetration into that market and executing our strategy, which really centers around our core products at the moment, things that are tried, proven, around content, data, analytics, digital media, and wagering technology, where there's a demand. So we're certainly working very closely with our partners over there, in particular the Sky Racing World partner that we've just signed up with for a strategic partnership to import international content into that US market and help grow Australian racing turnover, really create awareness around international racing products. And they have some really good innovation that they're working towards that for us to be part of. So that's a really exciting move for us. UK and Europe, we're obviously building the team out of the UK. We've got 3 very senior people working over there now from a BD and operations perspective. And they have deep networks in the UK, European wagering operators and aggregation operators as well. So that's where you might have 30, 40, 50 small sportsbook operators that don't have a racing product. The aggregators essentially provide just a capability. These operators sign up, use a white label capability, and essentially just promote their own brand into a jurisdiction. So they're all looking for racing style products, racing style content, and racing sports is perfectly positioned to help them with that, as well as trade and pricing. So again, a very exciting time for us to be in that emerging market. And sports, we're working on sports products with the same processing frameworks, analytics, and other unique selling propositions for our B2B customers as well. And there's also a B2C avenue from the digital assets that we're building and have built today. So the wagering technology part of the business continues to be a focus for us, developing our software as a service platform, the trading manager, pricing manager capability, as well as our race day control services, which is an essential service for wagering operators who choose that service to essentially have all of their triggers managed by us. When they're things like jockey changes, scratchings, going down to the barrier, grading, and then obviously the close of a race is really important to make sure that no bets get on after a race is actually done. And acquisitions, we're looking at key acquisitions in territories that will allow us for a increase in market share, increase in technology, increase in data, or an acceleration into new markets. So it really has to be a 1 + 1 = 3 equation for us to look at those. But there are certainly a couple that we're on at the moment just to see how they might fit at very early stages. We've had great success bringing on experienced talents here in Australia, the UK, and the US representative who's actually based out of Melbourne, who's just spent several years over it. He's working with one of the largest wagering operators in the world market. So again, a very exciting time for us. Recent business, so we've signed a partnership agreement with the Greyhound Board of Great Britain, essentially to help them innovate their product set and promote greyhound racing to a new demographic, new younger audience who are not as familiar as greyhound racing as other parts of their demographic. And we've also enhanced our contact with Sky Racing World, and that is for new digital media, new wagering products, and digital content to US wagering operators. So to maximise the opportunities that are arising out of the North American racing and sports markets, we are really positioning ourselves strongly to have a great partner over there to help us execute and commercialise our products into those markets as they continue, setting us up very nicely for fixed odds story whenever that comes to play, because we are producing fixed odds pricing for customers just outside of the US today. So for over 70% of racetracks, we're already doing that job. We're doing it in the UK for European customers as well as into Australia and New Zealand. So really important to note that that's ready to go when the time comes across the US market. And the North American direct channels and partnership model is still very strong in what we're doing. The fixed odds on sports has been licensed in more than 20 states, and really that's generated more taxes for those state governments. So again, a really important thing to understand is that as states across the US start to legalise fixed odds on racing, once they work out how to actually do that from a commercial perspective, then I think we'll see a very similar trajectory, but that'll take a bit of time. So our strategic partnerships in North America are really important to us. Entain obviously has a major partnership with BetMGM over in the US. We've expanded XBNet, and the Sky Racing World partnership again has increased our access to North American wagering operators through that trusted brand over there in the US market. And it's important to note that Sky Racing World are actually a subsidiary of Tabcorp here in Australia. So we've brought on some key people to help us with our growth story. As you can see there, these are just some of the senior people that we've brought on. And there's a much bigger team that we've actually managed to employ across Australia and in the UK over the past few months since we have IPO. So we've had a lot of success in hiring some really good people who want to be part of the racing and sports journey. Our executive team are fantastic. Gary, Crispe and Robert Lupardis are two of the founders of the business. Myself, obviously, been involved with the business for over 20 years. Andrew Burns, who's a highly experienced CFO, and comes with a lot of ASX experience. And Brent Dolan in the UK is our managing director over that market now. And he's got over 45 years of experience. And we have a highly experienced board as well, chaired by Kate Carnell. And obviously, Gary Crispe, executive director on that board. Greg Nichols, who's got a high degree of experience and networking within the racing and wagering industries across the world. Sophie Karzas and James Palmer both bring a wealth of experience to racing sports. So with that, we'll hand over for questions.
Thanks, Stephen. I might just get the ball rolling on the first one. In terms of, the data products that you supply, is there ever, a case of exclusivity? I look at, Ladbrokes there. So is it a case of, if Ladbrokes take it, they don't want you to, sell it to Coral, or is it a complete, if you pay for it, you get it type situation? And does that situation apply across all markets, whether it's the UK, Australia, what you're doing in the US?
Really great question. We do provide some customers with a discrete product for them, and that's normally something that we work on together. They've got a very specific need, but by and large, all the products we produce can be generated and sold across markets wherever they might be. We don't have any exclusivity on our product offerings per se to customers. However, if there's something very specific that a customer wants just for them, then we will work with them from an IT development perspective, a product development perspective, and help get that into market for them. So there are cases where we have done that in the past, but by and large, they're very happy to take the product that we produce and obviously use it on a B2B sense for them to attract customers from their digital platforms such as web and app.
And then just we stay on the customers, pricing power with customers or competitors, how does pricing work on these deals? Does it have automatic increases built in, or what would be a kind of a standard increase from year to year across the kind of four key divisions, I guess?
Yeah, look, we generally work on a subscription-based model for pricing. However, we are moving to a percentage of turnover wherever it's applicable to products and services that we're selling. And just to give your listeners a little understanding of that is essentially if we're helping a wagering operator increase their turnover through the better quality of content, information, analytics, then we will seek to gain a percentage of that uptick in their revenue and share the profits with them. And typically in that situation, we'd take a lower base subscription. We would actually share the risk with them. So that's a highly lucrative way to price products, but you've got to obviously be confident that it's going to hit the mark, it's going to increase handle on a wagering event. So, but subscription-based services today, I think account for over 80% of our revenue coming in, and they all work. Look, every time a customer wants new additional services, which we have seen in terms of existing customers wanting new services and products, we obviously add those in and price those up as we do with all of our products and services. Some customers have an annual CPI increase, and others obviously are done on a every 2 to 3 years, and we'll review, resubmit, reprice, etc. So it is a little bit variable and a little bit lumpy across the industry as demand, requires it. So all the operators have different release cycles and development cycles that we work with. So the revenue is it's a little bit lumpy, but in terms of incremental increases, it does happen generally across the course of a year as operators ask for new products, new information, changes to existing products. So it's not as clear cut as it's set and forget. We work very closely with all of our customers to make sure that they are getting what they need, and we can help them in any way they need, whether it be data or tech.
Okay, and then one from the audience, Stephen. Do you foresee any challenges growing in the US market given the mix of popular betting sports versus Australia?
Look, I think everyone's going to have trouble growing into the US market. It is such a big market. There are such major operators already there, but no one is doing what racing and sports is doing in that market, particularly in racing and innovation around racing. So we're focused on working with those large operators over there who we're already in discussions with to actually give them the appropriate amount of information, education, setting them up to attract new customers for wagering on racing. Racing is competing with a high sport-centric demographic, but I think there's an education piece there to start attracting people, making them aware of racing, aware of the fact that it's there, it's exciting. And Australian racing does exactly that here. In the UK, it's the same. So I think we're well experienced at doing that. And across all of our assets, including our digital platforms, we'll be working with those rights holders and those operators for exactly that.
Another one from the audience. What is your source data and what's your cost of sales? I mean, do you get data directly from race courses or from the turf club or the horse racing authority? Where does it kind of centralize back to you, I guess?
Yeah, good question. So the data comes from a variety of sources depending on who it is, but the majority, from authorized resellers and rights holders for the raw data. And it's important to understand that the raw data is just that. It's not really of high value. It's in its raw form. It's what we do with it after we get and acquire that data. We've even manually entered data in with our showing operations. We have a small degree of information that we want to actually manually enter in that gives us a much more of an enhanced data set that we can sell to our customers as well. So we really do take the data curation, data entry, and data processing very seriously in the business, and we do have a team of data curators just to make sure the quality of that data is being upheld. But the data does come from a variety of sources, and we obviously make sure that we're on the right side of all the rights, and the right side of that, because we're here for the industry and the industry is here for us. So we need to make sure that we're acquiring data in places and using it in the right way. But once we enhance the data, we apply our own intellectual property to it, our own analytical models, and we produce our own products for selling to wagering operators. It's very much a racing and sports product with comments, form, predictive elements and ratings. So it's very much taking a raw product and producing a very high quality distilled product at the very end of it. And that process can take several hours of computational processing and manual checks here and there to make sure the data is going well.
Okay, great. Stephen, we're just slightly over on time, so we're going to leave it there. Thank you very much for coming and giving us, I guess, a breakdown on all things racing and sports. And we look forward to further updates now that you're listed.
Yeah, thank you so much for the time, and thank you to your listeners for listening in today. Really do appreciate it.
Thank you, Stephen. Yeah, if you could stop sharing. And we now have Elias Hazouri from HiTech Group Australia with us, a little later than expected, but we have him. Elias, if you want to start sharing your screen, I'll let you know when I can see the cover slide, your presentation. If you just want to go.
Good morning. Thanks, Mark. And apologies to all for the confusion this morning, and thanks to Stephen for stepping in. Thankfully, he was more prepared, but we're here now, and I'll hopefully make this worth the wait. But if there's at any time you feel like you need to sort of ask questions, that's fine. Otherwise, wait till the end and we can go from there. Is the audio good, Mark? Is there any issues?
Yeah, the audio sounds fine, and yeah, you're gone to full screen mode now, so the presentation looks good as well.
Fantastic. All right. Thanks very much. So this is the presentation that we released to the market for our first half results for FY 2022. So some of you will be familiar with it, but I'll go through some of the points in the slides, and if there's anything to expand on later, then we can discuss it. So an overview of the HiTech Group, for those of you who don't know HiTech very well, we've been in existence for just on 28 years now. We've been publicly listed for almost 22 years. We are predominantly involved in the ICT contracting, consulting, and recruitment space. So most of our clients that we deal with and we facilitate our services to are in the government sector, predominantly in the federal government sector. We do have our own proprietary systems that we've developed over time. So we're very technology oriented, and everything that we've done is quite specific for our line of business. We've been developing this technology for close now to 23 years. We call our system HiBase, and it allows us to do a very extensive deep dive into candidate pools and match specific job requirements of clients to the appropriate candidates that we have. And we've built up a very large candidate database as a consequence of this, and that's where we source most of our people to be able to do the work for our clients. The HiTech personnel business is where we do the personnel side of things, and we are involved in more than just IT recruitment. So for a lot of our private clients, what we do is provide them a one-stop shop almost for their recruitment needs, whether it's permanent contracting or temporary staff, and it's across ICT, finance, office admin, sales, and marketing. As I said, the search and selection systems that we've developed are quite intelligent systems that we have proprietary development background in, and we make sure that it's quite an effective system, which also is required, as times change. We need to be able to update those systems and change the algorithms from time to time, and we do that dynamically as the market changes. So our first half of the year, again, producing record results now in our 8th consecutive year of double-digit growth. We've seen some accelerated growth over those years, and most certainly in the last 6 months to 12 months, we've seen more growth. Now, whilst the world and Australia was dealing with a pandemic, the digital transformation story really just accelerated, and that gave us a very strong uplift in revenue and earnings. So our revenue profile for the first half increased by 58%, EBITDA an increase of 36%, NPAT up 19%. We continue to pay very strong dividends compared to our peers. I don't think there's a comparable out there at the moment in our industry that pays these kinds of dividends, and we do so because we're sitting on a very strong cash surplus that we have, and we're trying to reward all of our loyal shareholders. The system that we've developed and the processes that we have served us incredibly well over the last decade or so. They continue to evolve, but it's, we believe, quite a unique system and quite a unique process of working and generating revenue in this sector that we're in, and they continue to provide us with record results. The profile of HiTech as an organisation is really unparalleled. There is extensive amounts of knowledge and expertise within the organisation. There's at least 55 years of combined industry expertise. Management intimately understands the drivers required to operate in this market and deliver these kinds of results that we're delivering. Our partnership approach with our clients and the tech professionals that we deploy predominantly in the government space, it's second to none. The way that we work with our people, the way that we engage with them is really quite a partnership focused approach. And that allows us to generate very strong recurring revenues And one of the things that we focus on is that profit is critical to us. So we're very bottom line focused. A lot of our competitors are very top line focused, and profit is a nice to have. Well, we see it the other way around. Hence why our revenues aren't, probably as big as people expect them to be, but our bottom line is most certainly probably twice what the industry average is. So we do have a deliberate push into specialized technology consulting and services space, and we're looking to grow that section of our business. We're seeing now emerging opportunities within the private sector, not just in the public sector. So we will be looking at that and trying to give that a bit more of a focus, a bit more attention. We do want to get into the more lucrative and sticky statements of work type of arrangements. They're the ones that we believe will have a higher margin for us. And we have been doing this, but again, we want to develop that further in due course. We have a very strong partnership approach with our clients, and that we mean that. We don't just say it, and that's the way that we engage with our clients and our candidates. And of course, our candidates are key assets for us. So we value them, we treat them with respect and dignity, and we make sure that they're getting what they want from the service that we provide. We do have a unique ingrained culture of financial discipline, I believe, and you could see that in our financials. We've never had any debt. We don't plan on having any debt. We have an enormous cash surplus. We don't need the kind of cash that we have there, but we prefer to operate that way. And it gives us flexibility on cash flows. And everything that we do is aligned with shareholder values and shareholder wealth. The HiBase and the HiTech system itself is our key competitive and sustainable competitive edge. It's a predictive system that we've developed. HiBase is a tool that built by HiTech for HiTech based on the operations requirements. It's an extensive database of candidates, well over 390,000 professional candidates in our database. Many of them have security clearances, and many of them have been working with HiTech for a long period of time. The HiTech services team, the ICT services team, is really put together based on our clients' needs and wants. They want a team that can come in, deliver a piece of work, and then hand it back and continue on with their operation. It's a kind of work that we want to get deeper into, and it's the kind of work that I'll talk about later as one of our key acquisition targets, what we prefer to be looking at in terms of acquisitions. It's the project delivery system we believe we have is best of breed. We call it PDAS. It's designed to fit what the client needs. It's flexible. It mitigates risk for the client, and it allows us to best utilize our candidate pool and our expertise that we have in managing projects. The digital solution that we provide is really quite extensive, of course, in this day and age, and as you all would have seen, based on the budget funding that we saw recently, there is no short way to engage in a digital manner, and you really have to do it properly. There's no shortcuts to what you do when it comes to digital solutions. They all seem fantastic on the user interface side of things, but at the back end of things, there's a lot that goes on. And of course, at the height of all that is cybersecurity. So that's going to be an enormous opportunity for us, and we've always focused on that. We're building our capability in that. In due course, we hope to build a digital and cybersecurity practice that we believe will allow us to monetize our extensive candidate pool. The ICT sector overview, it's really just going in one direction as far as manpower and demand on services. There is going to be a substantial increase in the number of workers, ICT workers, required to permit and facilitate the project growth that's happening in ICT, and whether it's on the private side or the public side, It's extensive. No matter what you look at, who the provider of these statistics is, whether it's Deloitte or the Gartner Group, you're going to see a very strong upwards push for more ICT workers. And that sits nicely with our profile and what we do as a business. As far as what we do and how we do it and where we're ranking with our competitors, the Digital Transformation Agency publishes regular or monthly reports on where the providers, or what they call sellers, to government in ICT sit. There are over 4,000 sellers on the digital marketplace, and HiTech predominantly always occupies a position in the top 5. And this has been ongoing since 2016. So at the moment, we're sitting at about 2nd position. But if you look at our competitors and the company we're keeping there, these are organizations. The very top one, you can't quite see the name, is Hays. But these are global organizations with billion-dollar revenues. And this is where we sit. This is the kind of company that we keep. But our focus is really not to be, one of the leaders in simply number of contracts awarded, but it's on profit. So when you see our numbers there, you know that they're highly profitable numbers. And I will almost guarantee that if you compare us to any of those people in the top 10, we far outweigh them when it comes to profit margins. So it's quite a lucrative position to be in. It gives us a lot of leverage, and when buyers, government organisations, want to go out to the market, this is a very strong direction for them to go in, and we're usually invited on a selected basis to assist them with their ICT needs. The revenue profile, as I said, predominantly federal government. There's some private mix there. There's some state government as well. We don't focus too heavily on state government, but it is a part of our setup, and we are on the preferred supplier lists for all New South Wales state government departments. But most of our revenue is generated out of the federal government space, and some out of the private space, but we're working further on that to develop it. So, as I said earlier, it's the 8th consecutive year of double-digit growth for the group. We're quite pleased by that. In fact, I'm very, very grateful for that. We've tried very hard. We've worked as a team incredibly hard during the pandemic lockdown periods and all of the destabilizing moments we went through. The team has been absolutely resilient, and it's testament to the way that we work and that we operate that we're able to produce these kinds of results. Of course, we want to ensure that we continue with this kind of trajectory. I'd love to tell you that we can produce high double-digit growth in the years to come, but I'm far too conservative to say that to you. So if we can produce that, I'll be ecstatic. If we don't, I think we'll still produce some very, very pleasing results. And as I'm sure you're aware, these are really without any. There's no comparison here to our industry peers. Nobody's producing these kinds of results, but they operate very differently to us. So we're quite pleased, and the directors want to continue to offer dividends, and that's the focus of the board. Everything is focused on shareholder returns. We do want to make sure that we are experiencing revenue growth, but not for the sake of revenue growth, but more for impact growth. And that's the kind of profile that we're trying to maintain. And hopefully we can continue to do that, as I said, because the market right now and all indicators show that we should be able to produce these kinds of results year in, year out. Now, this is something that we really haven't privied the market to in the past, but I did want to give the market and investors a bit of an insight as to how we do it. A lot of organizations talk about client service and engaging with clients and servicing them and, being customer service centric. We actually just do it. We don't talk too much about it. But we do it because we understand our clients' needs and what their programs of work entail and what they're going to need as far as skills and talent is concerned. We don't want to assume anything. That's why we spend a considerable amount of time getting to know our clients and their programs of work. It's difficult in federal government to get in there and for them to explain to you everything about what they're doing, because a lot of this stuff is somewhat confidential and it's at a highly security clear level, but they trust us. They trust the HiTech brand. They trust the HiTech people because we've proven ourselves over so many years now. And because we don't assume and we know, we're able to hit the mark every time. So this is really, really important. And, you know, it takes many, many years to cement the kind of trust that we have in place. And for our buyers and our partners, our key clients, to actually trust us and rely on us so that we become a very dependable supplier. And we know that in a moment, trust can disappear. So we really work hard on ensuring that we continue to be a trusted provider and that we're there for our clients. And we set up a 24-hour desk, 7 days a week during the lockdown periods for anything that goes wrong with our clients' sites. And we were there to give them resources on demand at any time. That's the kind of partnership approach that we work with. And we don't just, you know, set and forget. We nurture these relationships, and we work very hard on maintaining a high performance level for our clients. Now, it's all good and well to be a supplier on the digital marketplace, for example. There's over 4,000 of them. But do they know how to operate that kind of arrangement? That know-how is something we've built over many, many years. And that is something that differentiates us. And that is something that gives our team a competitive edge. We know how to service our clients, and we know how to operate those kinds of supply arrangements. And of course, our team, a very high-performing team, very efficient team, no slack that goes on in that team. We still have some economies of scale built into there, but it's truly a family ethos that we develop within the team. And when we talk about partnerships, we engage from a family perspective so that we are partnering with our clients and providing a superior, excellent service. And of course, at the end of the day, if it's not giving us the right margin, we will walk away. And that's just how we work. So it has to be a win-win, and we endeavor to do that. So that's a bit of an insight into how HiTech does it. We are looking always for acquisition strategy targets. It hasn't come to fruition. We've tried several times now. It's been a various range of reasons, but predominantly it's because people either wanted a little bit too much and they wanted to walk away too early, that we haven't, finished an acquisition or finalized one. But at the same time, we know there's extensive opportunity on the organic side. So, we're happy to continue down that path and not rush into an acquisition strategy, because as we know, many acquisitions don't work out. So whilst we want to do it, and we want to do it not just in the contracting space, but also in the IT services space, and predominantly in the cybersecurity side of things. When you have the Tesserants of the world and CyberCX doing their thing and overpaying for these organizations, we'll just wait and see. And I don't think we should be rushing it. That's basically it, ladies and gentlemen. Thank you again for your time. I do apologize for the mix-up this morning, something out of my control, but I thank Mark and Stephen for stepping in and engaging with you. If you have any questions, please fire away.
We do have two questions from the audience, so let's get to the first one. There's been some rhetoric from the government about reducing the reliance on IT contractors in the public sector. How likely is this?
Highly unlikely. It's great rhetoric, and every government will talk about that. But if they are to deliver these kinds of projects that they're setting out to deliver, and when they have a cyber security budget allocated of well over $9 billion, it cannot happen by relying on your full-time employees in the public service. It's just rhetoric.
Okay, another question. Can you expand on your revenue model? Is it a flat fee for the delivery of a particular project contract, or is it a percentage of the salary staff members placed at the project, or something else, some kind of combo of fee plus percentage?
Okay. So in traditional recruitment, you have either permanent placements or contracting placements. On the permanent placement side, the client asks us to find someone to do a particular job, and there's a particular salary attached. What we do is we can go and find that person, place them with the client, and we charge them a one-off fee as a percentage of the salary or annual remuneration package. So that's a one-off fee. On the contracting side of things, the way it works is that we pay a contractor a certain pay rate, and then they work for us, and we deliver a particular contract or services agreement to the client, and we charge the client a particular billable rate or charge rate. The difference between what we pay the contractor less our costs and what we charge the client is our profit margin, and that's an ongoing recurring profit margin which occurs on either on an hourly basis or daily basis for the term of the contract, which could be 12 months plus 12-month extension options. Then that's the kind of revenue that we're predominantly dealing with at HiTech, and the kind of where our profits are generated from. So it's a mix of both, but we're predominantly in the contracting and the services space. If we do the ICT services business, so that's outside of the traditional recruitment side of things, it's more on the program of work or project delivery side of things. It's a fixed price for delivering a particular project within a set period of time, and we get that fixed fee. How we supplement it is with our people, whether they're permanent employees of ours or contractors, and then we obviously, what we pay them versus what we charge the clients gives us the extraction of our profitability in between.
And if I can jump in with a question here, obviously the labour market has been incredibly tight over the last 12 to 18 months with the border being closed. What does the reopening of the border mean for you in terms of, ability for candidates to come to Australia, and what, if any, impact that's going to have in terms of wages and the ability, I guess, for you to fulfill client needs at a faster pace?
Yeah, look, it's an interesting question. I mean, we always want more candidates to come into the market, and it does naturally create more competition when it comes to pay rates of individuals. Unfortunately, what you have though in the government space is you do need them to be usually as a minimum Australian citizens with some level of security clearances. Now, for us, it's actually going to work in our favour to have more candidates coming into the market. We are now accredited by Department of Defence as a DISP member, which gives us the ability to sponsor security clearances for people that we deem necessary to do some of the contracting work that we have. So if they are Australian citizens and don't have security clearances, they will be limited as to what kind of government roles they can get into. But having that ability to sponsor these individuals means that we can then give these people more value by giving them these clearances. So that's actually a great opportunity for us. So there will be some people that were Aussies, if you like, that have been trapped overseas and will come back now, and that will help us. But as we exist today, the market is really quite in favour of the candidates. They are pushing for higher rates, and they probably will get it. And at the same time, the clients are kind of resisting on paying more for these services, but they're going to have to bite the bullet. The budget has shown that the government's willing to spend some money to get the right technologists in place. Whether they come from overseas or not, we'll wait and see. But I think it's a great opportunity for Aussies, Australians, to maximise their earnings, and at the same time for government organisations and the private sector to get some really good expertise locally. And I think that's bringing in more candidates into the market. It's only going to help the situation, but I don't think it will necessarily have a huge impact on rates and salaries. It will help alleviate some of the tightness around the candidate shortages we're seeing, but I think we need a lot more. We need many, many more. If you look at some of those surveys, there's going to be a substantial need for more technologists, more technology workers. So the more that can come in, the better.
And then just a question on, I know it's been a long term goal to expand the revenue that comes from the private corporate sector. But does it really need an acquisition to make a meaningful part of revenue, or could you headhunt a small team with deep contract partnership relationships in a particular industry, whether it's financial services or healthcare, and say, okay, this team of 3 to 5 people are really going to build out our corporate offering, and for the start off it might be in one particular vertical, say financial services?
Yeah, it's a very good point, Mark, you make. I guess one of the ways, the philosophies that we've always worked around is that we want to develop our people internally. And we're one of the few employers that train staff from the beginning. One of the risks you have in bringing across a team, and it's across different industries, is that you become somewhat reliant on them. We don't want to do that, but it doesn't mean we can't grow it organically. Yes, of course we can. We can. We don't have to make an acquisition to develop that revenue side. The private sector side was actually, in fact, it was the key generator for HiTech some 10, 11 years ago. We decided to shift across to the government contracting side because it was a more recurring revenue annuity income. But absolutely, that is within our sights, is to get the right people on board to develop that side of the business. And I think we will do it. I think we will do it very soon, sooner rather than later. And in fact, on the permanent side of things, it's quite a profitable exercise. And I think if we can, the way we used to do it, then you'll see a very big uplift in profitability.
And then a final question from me. You're pretty much exclusively with the federal government, and you don't do much with the state governments. Even you're Sydney based, the New South Wales one. What's the, I guess, unattractive nature of dealing with the state governments over the federal governments? Is it they're not as organized, or they just don't have the need as much as these federal projects, because a lot of them require security clearances and it's handled at a federal level rather than a state level?
Yeah, good question. Look, we look at margins first of all, and the opportunity to generate strong margins is more prevalent in federal. Now, should we be targeting state government and trying to push that? We're limited. We can do high volume, but not very good margins. So whilst you've got a high-performing team, highly efficient team, you want to make sure that they remain that way. And the key criteria to ensure that performance remains is that their effort is focused on the maximum returns. So right now, state government isn't as attractive based on margins. But we could, if we wanted to, for the sake of top line, we could target the state government instantaneously. It's not as though we're not known there. It's just that we don't choose to do as much as we do in the federal government space. But certainly, if we find an acquisition or we find some growth internally in the team where we feel that there's opportunity to fill some underutilization within the team, then we will turn to government and we can really activate that very, very quickly. It's just it may not be quite as profitable, and that's our experience today.
Okay. I think we'll leave it there. We've just gone slightly over time, but thanks for bearing with us, everyone, and the slight change around in the agenda, but we got there in the end.
Yeah, we did. Thank you all.
And with that, I'm going to close this morning's event and wish everybody a good rest of their Thursday.